Welcome back to Bitcoin for Corporations. I'm here with Robert Gutman, the CEO of NYDIG. Robert, welcome back. It's nice to see you again.
Michael, thank you so much for having us back. And thanks so much for putting on this event and for everything you do for the community. It's great to be here and great to be part of the show.
For those who aren't familiar with NYDIG, can you tell us a bit about the company and how you came to be?
Sure thing. So first and foremost, NYDIG is a Bitcoin company that helps corporations and institutional investors access the Bitcoin network. There are really two relevant parts of our business for the discussion today. So the first is a set of corporate treasury and asset management solutions. The second, and perhaps more interestingly, is a software as a service platform where we make our platform available via API for companies to integrate and build their own products and services. And I think the big theme here for today relative to last year is really a difference of what we're seeing in the market, where last year we talked a lot about corporations skipping straight to big Bitcoin positions on the balance sheet. This year, what we're hearing is much more companies asking, how do I use Bitcoin to attract and retain the best talent, new customers, existing customers? And they may naturally accumulate a Bitcoin position on the back of the solutions we deliver to them. And that's when we really bring our corporate treasury solutions to bear. Big picture, NYDIG started because we had this problem ourselves. So we're a subsidiary of a larger financial technology holding company called Stone Ridge Holdings Group, which is committed to financial security for all. And we see Bitcoin as a fundamental piece of financial security for all over the coming decades. And, we've been Bitcoin weirdos at Stone Ridge for a long time, since before it was cool. And as we accumulated Bitcoin for our own balance sheet, we found some of the solutions in the market lacking. And so we ended up developing our own. And today we run everything off the descendant of that initial platform that we developed to buy and hold our own assets. It's a single, common, regulated, audited, and insured platform. We don't deal with retail end users. We only deal with institutions and companies. And we conduct ourselves in accordance with three principles in everything that we do. First and foremost, we do our best to be kind in all our dealings. Secondly, we do our best to be humble in all our dealings. We have many strong opinions, but are not afraid to change our mind in the presence of new data. And finally, we do our best to conduct ourselves with focus. We pick a few things and we work really, really, really hard on them, like Bitcoin, for example.
Laser eyes. We like laser eyes. So how are you seeing corporations engage with Bitcoin, and what do you see as the biggest areas of focus for 2022?
Yeah, it's a great question. I mean, I think, again, really what we're seeing is companies more and more asking themselves, how do I use this network to grow my business, to enhance the P&L, to attract and retain the best talent, to attract and retain new customers or existing customers? And so again, what we're able to do is really deliver a solution that's like Amazon Web Services. It's a raw set of components that let people build anything they want. There are certainly a number of patterns that we're seeing and some areas that we're focused on. So for example, we have about 300 banks and credit unions set to go live with a white labeled trading platform in the first half of 2022. And I actually expect that to grow because what we're seeing from the ones that are live today is if you have a banking customer, one customer that's enabled the Bitcoin functionality, one customer that hasn't, on average, the customer that's enabled the Bitcoin functionality has 40% higher engagement than the customer that hasn't. And the chief marketing officers love this because what they would have to do, they would have to spend in marketing dollars or other efforts to have 40% higher engagement from a customer is way, way, way more than the economics of rolling out the white label trading platform. In terms of the fintech channel, like our partners at Affirm and Upgrade, we're seeing similarly high levels of engagement. So for example, Upgrade has made public 1 in 10 of every new card that they're issuing is actually their Bitcoin rewards card powered by NYDIG. And we have other fintech integrations that are launching soon that we expect to have that level of engagement, if not more. And final example I would give you is we recently went live with a partnership with Landry's, which is the largest privately owned restaurant chain in the US. And Landry's has a branded rewards program, the Landry's Select Club. And there are over 4 million users of the Landry's Select Club that now have the opportunity to convert their points into Bitcoin or earn Bitcoin going forward every time they dine at a Landry's property. And we're seeing dramatically higher take up of the program than we planned, both from the customer side and actually from the server side. The servers are very excited about it, and dramatically higher engagement once a customer has opted into the program. And it's a really interesting dynamic. It works on both sides of the price movement. So what happens is customer converts their points, their Landry's points into Bitcoin, price goes up. Now they take their wife or husband out to 2 steak dinners rather than 1 because they have some extra assets. On the flip side, if Bitcoin price goes down, they may go eat extra at a Landry's property, earning more points than they would have otherwise with the price lower than what they think is kind of fair value. And so I would make a couple other interesting points about this, because we are seeing this pattern across a lot of the integrations that we're doing, which is this idea that you can actually bring things out for customer engagement that don't require them to spend any money to start stacking sats. So the Landry's program is a perfect example. They were going to go out to Landry's or Bubba Gump or whatever it might be anyway. Now they just get some Bitcoin. And from a psychological perspective, from a consumer behavior perspective, that's very different than having to spend my hard-earned money to opt into stacking sats. So whether it's that, or whether it's the upgrade reward card, or a few other things we have in the works, opportunities to earn Bitcoin by doing things consumers would do anyway is a big pattern that we're seeing for attracting and retaining new and interesting customers to these companies. And the final thing I would say about this is we were able to get Landry's live in 45 days, from signing the contract to customers earning Bitcoin when they're dining out, 45 days. And I think that's a really interesting statistic potentially for the audience to take away, even if take none of these other stats away, is that at this point, because we've been doing this for so long, any legal, regulatory, compliance, security, technical, accounting, whatever it might be, we've asked and answered all these questions, and we're prepared. Whatever, most of our background is in working with highly regulated investors, whether those insurance companies or banks. When it comes to a merchant loyalty solution like a Landry's, in many ways, that's a lot easier than a highly regulated industry. And that also sets us up well as we start to look at other regulated industries like gaming, for example.
So, I love the Bitcoin for everybody theme, because what you're doing is you're letting banks and financial service providers and retailers build Bitcoin into their product or into their service in order to drive engagement and loyalty with their customers. And we definitely can see the engagement on Twitter. People with Bitcoin are more engaged than people that invest in gold, right? And
that's right. Price moves more. There's more action.
On CNBC, they're not flashing the gold price in the lower right corner of the ticker, right? So I think it's a great customer engagement strategy, and the idea of stacking pancakes to stack sats, that could be a very interesting slogan too.
We'll bring that back to Landry's. I like that.
Yeah. Okay, I give you the idea for free. No royalties required.
Thank you. I appreciate it.
So let's say I got a Bitcoin-powered loyalty program, and maybe I'm making payments in Bitcoin. I've got Bitcoin flowing in and out of my company. Well, let's say I've got, maybe I want $1 billion of Bitcoin on my balance sheet. How can you help me get there? What do you guys do?
Sure. Hypothetically speaking, for example.
Yeah.
And I think sort of to close out and transition to this, it really is the case that we're seeing. So for example, in the loyalty program, so every time a customer stacks a pancake to stack a sat, the corporate turns around and buys the Bitcoin on their balance sheet to fund their liability, because at some point the customer will redeem that point to buy more pancakes. And so that's really where this is an example of the natural accumulation of Bitcoin that we're seeing that results from these kinds of customer engagement strategies, rather than going out and saying, as a matter of result, I want to develop a $1 billion Bitcoin position. So, but let's say these programs running for a long time, or you just happen to have $1 billion of Bitcoin. There are really 4 things that we're seeing in the corporate treasury part of our business. And again, we have all the raw building blocks. Like we can do any financial service, any product, any service that you would on any traditional asset class. We have the regulatory structure and the expertise in-house to do it. But again, there are some specific patterns that we're seeing. So the yield pattern, the search for yield using an overriding that I'll talk about. Second is how to lower volatility or cap downside. We have some solutions for that. The third is how to borrow against the position to get some cash out or liquidity without necessarily a taxable event. And then finally, especially for these companies that are accumulating as part of their business rather than deliberately setting out to establish a position, sometimes they do get orange pilled and want to accumulate more. And so we have some specific execution strategies that we run to help people accumulate large positions. So for example, to give you some stats around the earning yield use case, this is one of the most common things that we do. This was very big for us in 2021 and looks set to grow more in 2022. So our customer base tends to be fairly modest in their yield goals in the grand scheme of the crypto landscape. So we tend to see people targeting a 10 to 20% annualized yield, and you can retain the.
You consider that modest
in the crypto landscape, where sometimes you see people saying, "I want 30, 40% annualized yield."
Okay, fine.
Certainly, in the broader scheme of what's available in traditional financial markets, one of the things that's exciting about a Bitcoin balance sheet position is dollar yields like that are available in a safe, audited, insured, regulated way using strategies that are transparent to the end user.
Okay.
So let me put some numbers on that for you. So if you started 2021 with $1 billion of Bitcoin, and we had about this much in the strategy in 2021, let's say you want to target this yield, you sell a 1 month call option, 30% out of the money. So for example, let's say the Bitcoin price level is 40,000. That means you have upside up to 52,000 for the next month. If you did that every month in 2021, your $1 billion would have grown to something like 1.8 billion. So 80% appreciation, 800 million of profit, with about 260 million of that being cash yield from option premium minus anything that you had to pay to settle the option. So you would have ended up 80% and gotten $260 million out of your position to reinvest in your business or deploy however you saw fit. And again, we think so, and our clients certainly think so. And I think it's worth saying out loud, this is a very common strategy in equities, for example. It's just more attractive in Bitcoin because implied volatility levels are higher because realized volatility levels are higher. And that's actually a good transition into a second strategy that we did a lot of in 2021 and are setting up to do more of in 2022, which is people looking to cap downside. And so again, especially for these corporates where owning the Bitcoin and the volatility is not a core part of their balance sheet strategy, it's something that falls out of a customer retention or an employee retention strategy. They say, okay, I want to have the Bitcoin, I want to have some of the upside, but I want to cap my downside. And so for them, we do something that in industry jargon is called a costless collar. So for example, in 2021, the trade we were able to put people in for most of the year was we're able to cap their downside at 20%. So the most you could lose was 20% or retain 80% of your initial asset value on the day of the strike. And for that 20% loss cap, you're able to retain 100% of the upside. And so that was something in particular that we found very compelling. The market has flattened out a little bit today, but in terms of
great collar trade.
It was a great collar trade. We saw a lot of people doing this one. And it's something, again, that I think is a great fit for corporations that want to run these employee retention strategies and want to have some Bitcoin exposure on their strategy, but don't want all the volatility necessarily that comes along with the long-term bet of holding it unhedged.
So presumably someone could like taper something where they sell some volatility to generate yield. They cap some of the downside and still have some upside too, and some hybrid configuration depending upon
that's absolutely right. And in our business, it's all bespoke. It's all customized. Minimum for these things are $100 million generally. Sure. And so each one is, let's sit down, let's understand your specific objectives, let's understand how it fits into your broader treasury strategy, and we'll put all the building blocks together to design a strategy that works for you, customized reporting, everything. Something else we're hearing a lot of, especially for people that got into Bitcoin, let's say in the $5,000 to $10,000, even up to the $15,000 range, is, even though we've sold off, they still have a fair amount of unrealized gain in the position. And so they're asking, how can I get some liquidity? How can I borrow against it? Maybe I want more liquidity than an overriding strategy would generate, but I'm not ready to sell. I don't want to realize the tax, whatever that might be. And so we are doing very brisk business, lending against Bitcoin. And from our balance sheet, we're doing $100 million and up for corporations that want this. And we are starting to see, given how big people are in the market, sometimes where that's not enough. And so what we're able to do is bring in banks that lend directly to the client, where NYDIG services the loan. And so we can build a package of these things. We'll do the first 50 or 100 or 150. And if you need more than that, we'll bring in one of the banks that we partner with. They'll do their own underwriting and make a loan, and we'll service and custody the collateral all together in a package. And if even that's not enough, we're able to work with Jeffries, for example, that you saw in the last session, to bring in even more banks to get additional liquidity against very large Bitcoin positions. And again, each of these is tailored, is bespoke. I think something that's new, we talked a lot about sort of what's different in 2022 versus 2021. Having $500 million of liquidity available against a Bitcoin position and kind of semi-regularly, I'd say, being able to put that together for people, that feels new in 2022 and feels like a great thing for corporations that are getting into the game.
Yeah. So how do you feel this? How do you see this business evolving? If I go back 18 months versus today versus forward 18 months, how has the Bitcoin banking, loan volatility trading business from institutional perspective evolved from your point of view? What do you see?
Yeah, I think you're already seeing the more traditional balance sheets coming into the market. And I think that's a great thing. And I think that only continues. I think that just continues to normalize the market, make liquidity more available. Already in our business, if you go back to those examples I just cited, that's in a lot of ways the differentiation we bring to bear is, for those cap downside trades that we put people in, we run a match book there. And so to the extent someone buys a put from me, we turn around and source that downside protection from another source. There's only so much of that capacity available in a reasonable way in the crypto ecosystem. So a big part of what we've been able to do is bring other balance sheets. We're able to place that exposure on their balance sheets, where if it's a crypto market maker, there's some great crypto market makers out there. I only want to buy so many puts from them. But if it's part of a giant insurance company balance sheet or a giant commercial bank balance sheet, where it's, 1/10 of 1% of their exposure is some Bitcoin downside, I feel great about that from a counterparty credit perspective. And same thing with the financing. And we're already seeing it with the work we're doing with Jeffries. They're just much more plugged into counterparties with hundreds of millions to lend against this ecosystem. And so we team up with them and we bring the regulated, audited, insured custody and the collateral management capabilities to bear. They bring the dollars, and it works great for the client. And I think that's just what we'll continue to see over the next 18 months, just a continued normalization of other balance sheets coming into the space.
Got it. Okay. So I saw the other day you had a big product announcement about a Bitcoin savings plan. And I know we've been interested in how do we plug a savings plan in for our employees. And I talked to a lot of other companies who are thinking about how do I get paid in Bitcoin. So can you tell me a bit about the program and what you're thinking and what does it mean to corporations?
Yeah, absolutely. So we just announced this yesterday. We're very excited about it. It's a perfect example, I think, of what I mentioned at the beginning of how are corporations thinking about actually using Bitcoin in a world where consumers want it to drive their business. So in this case, it's all about employee attraction and retention. And you're absolutely right. This is something, it's not new. It's been trending on Twitter. Athletes and influencers are getting paid in Bitcoin. hashtag paid in Bitcoin all over Twitter and the crypto sphere. And so what we decided to do is say, okay, are there more people interested in this? And so we actually did a fair amount of survey work that we also published yesterday with the announcement along with the initial takers in the program. Some of the results are pretty astounding, at least to me. So for example, 96% of employees are concerned about inflation. 96%. So it's definitely the buying
power. You can't
power.
get 96% of employees to agree on anything.
You can get them to agree on this. How many loaves of bread will my dollar buy? It's, rightly or wrongly, how informed they are about macro policy, whether it's all narrative driven. Wow. The survey result is the survey result. I had the same reaction. Next stat that I thought was compelling and that people we talked to in the program are compelling. So 36%, more than a third of employees under 30 want to be paid some portion of their paycheck in Bitcoin. So pretty strong result. And in many ways, the most staggering, 42% of employees who already hold Bitcoin. So Tay, you have a job, you already hold Bitcoin. 42% of respondents said they would leave their job for a similar position at a company that gave them the opportunity to defer part of their paycheck into Bitcoin. And we put those three numbers in front of corporations, and it kind of does the rest. It's a pretty easy sale, and the integration is super easy. And what we like about it, and what I think the other people like about it, is it's all optional. It's all opt in. If the head of HR at one of these big companies, if they don't want to get any portion of their paycheck in Bitcoin, like totally fine. They don't have to opt in to the program. And actually the company doesn't pay if they don't opt into the program. Company only pays if an employee opts into the program. Employee gets to pick how much of their paycheck they defer. And it's totally seamless. And, we think that accumulating Bitcoin as a piece of a long-term financial strategy alongside something like a 401k or other tax-deferred strategies, we think that's an important part of a long-term savings plan. And if there are employees that think that way too, we think they should have the option. No one should be forced into it, but giving employees an option, we think is very valuable. So we're excited to give every employee in America the option to get paid in Bitcoin. And for anyone that's interested, they can visit paidinbitcoin.com.
It seems like a no-brainer. Like, why wouldn't you want to offer that as a service to your employees, given how competitive the labor market is right now?
That's a big part of what we're hearing. I think that's exactly right.
So in our last few minutes we have left, Robert, do you have any advice for corporations looking at Bitcoin or thoughts about the future of Bitcoin in the industry?
Yeah, I'd say going back to the survey stats, for example, a big part of your customer base is thinking about it, and a big part of your talent pool is thinking about it, even if you're not. And I think that's the big theme for us in 2022 is how do we have products and services that let companies capitalize on that in ways that work for everyone. If, again, you don't have to have a Bitcoin treasury position to give your employees the option of deferring part of their salary into it. And so we have a bunch of products and services like that, and we're seeing a lot of take up there. So my advice is don't be scared. Give us a call. We can help. Many of the problems, in many ways, all of the problems that we've seen from the kinds of companies that are doing this have been addressed and managed with solutions that have been tested now for multiple years, and we're excited to bring them to bear for companies across the world.
Thanks, Robert. This has been really informative.
Thank you so much. And I would get in trouble if I didn't make a last plug. We are hiring. We're about 300 people at this point, including our UK-based subsidiary BottlePay. So if anyone out there wants to join us in our mission to bring Bitcoin for all while being kind, humble, and focused, you can go to NYDIG.com/careers, and we'd love to talk.
Awesome.
Michael, thank you so much for having us. Look forward to next year if you'll have us back.
Of course. Same.